Hi and welcome to Direct from the Desk. My name's James Gerrish. We're Friday afternoon. We're about 20 minutes into the close of trade. Excuse the pods in the ears. I've left the charger to my other recording equipment in the office, so obviously not going in there to get that this afternoon. In terms of the market, I just wanted to do a quick video to reflect perhaps on the week that has just been. What was catching my eye mainly during the week, how we've been positioning our portfolios over the period, and a couple of things that are really catching our attention. So today's been a weak session on the ASX. The futures market was pricing in a rally of 120 points this morning. The market opened strongly, probably not as strong as that futures market was anticipating, but higher nonetheless. Throughout the day, the sellers have got really in control of this market, and we're seeing that typical Friday sell-off play out. It was interesting, last Monday wasn't as negative as other Mondays that we've seen, but still we're seeing that selling come into play on this Friday afternoon. So the market is trading down about 100 points at time of recording. So again, it's a pretty weak session. This week has been characterised by lowering of volatility across the board. So if I think at the top level, the volatility index has traded to a high of 85. The VIX is now trading around 50. So we've seen a marked decrease in volatility. It's been a week of consolidation across both equity markets as well as bond markets. So we've written a lot about what's happening, what's at play in terms of the bond markets. We've seen an improvement in the US corporate bond market. We've seen credit spreads come in a little bit, tighten a little bit, which is obviously a positive for risk appetite. It's a positive for companies trying to refinance, etc. Speaking of refinancing, one of the themes we've seen this week is that a number of local companies have managed to recapitalise their balance sheet from equity investors. So we saw Flight Centre come back on the board after 16 days of hibernation, raising capital. The price was $1.70. It's a low price, but the fact that they could get that equity capital raising away is obviously a positive, and it was really well supported. So it was oversubscribed. So I'm hearing in terms of the book, we've seen another number of capital raisings. IDP Education, NextDC, Cochlear, of course, had a big $800+ million raise in the prior week. So those companies that can manage to raise capital in this environment have actually started to move higher as a consequence of that. So capital raisings have been, they're generally not, institutions, large institutional investors are reluctant to go in there and weigh in on capital raisings if their view is the market hasn't found or at near a low. So I think this is a positive sign in terms of what we're seeing play out in terms of capital raisings, and obviously the subsequent bounce that we've seen from a lot of the companies that have actually raised capital. So it shows that, once you get your balance sheet in order, the market will bid you back up. The energy sector's caught my eye this week. We've added Santos to the portfolio earlier on in the week. The energy market, the oil market, has had so much thrown at it in the last couple of months. Obviously, the spat between Russia and Saudi Arabia coming on the back of COVID-19, which is going to have a big negative impact on global growth. So you've got high supply in an environment where you've got low demand or lowering demand. Then obviously prices go lower. I've often said that one of the cures for low prices is low prices. Once prices are so low, new production doesn't come online, projects get shelved, and there is a point, and I think where $20 a barrel oil doesn't work down here. There's a point where obviously production comes off, and then that has a positive influence or impact on price. So look, I think we're more favourable in terms of the energy exposure in our portfolio. We've been, I think there's been so much mud thrown at the energy sector that the risk is on the upside in terms of our domestic oil and gas players here in Australia. The other thing that I just wanted to touch on is around portfolio positioning. This week we made a couple of changes to portfolio positioning. We added Aristocrat, we've added Zero into the portfolio. We tidied up a bit of the portfolio earlier on in the week, just tightening it up, improving the quality of the portfolio and positioning for further upside in this market when it comes. The market's going to continue to be very fickle. There's no two ways about that. We're reluctant to chase strength in the market. We want to have flexibility to buy any weakness that prevails, but ultimately our main focus is on improving the quality across our portfolios. We added Transurban to the income portfolio this week. Transurban came out with a pretty good announcement. I didn't think it got enough kudos that it deserved. They've tapped bond markets. They've raised about $1 billion in new debt, new long tenor debt. The rate there was around 3%. So that's it. Transurban's an investment grade issuer. So the fact they've been able to go out there and tap $1 billion for at a rate of 3%, that's a positive sign for mine. It was on the same time they came and gave an update on the 1st of April. They gave an update on traffic, etc. No doubt traffic is going to be weak while the lockdown happens, but you've got to be staying in position portfolios for the as we come out the other side of this. So look, I just wanted to give you a quick update on a Friday afternoon. I hope everyone has a very safe and happy weekend. As I said, the market's trading down around 100 points going into the close. So a weak session, but hopefully next week, this period of consolidation that we've seen this week gives way to some further upside in the market from here. Bye for now.